Good day, traders. Indexes in oil have reacted to two explosions that rocked Brussels this morning, killing an estimated 28 people. Airline and other transport stocks have been the main pressure builder, and government bonds and gold are attracting most of the trade. It's Tuesday, March 22nd, and this is WMoption's New York Session Market Review. U.S. stock futures await manufacturing and housing readings today, as well as Fed member speeches to lift indexes after this morning's drop in futures. Until yesterday, overbought indexes were continuing to find buyers, but beginning to consolidate horizontally. Yesterday's data from the U.S. was not good, with existing home sales plunging and the Chicago Fed Activity Index dropping into negative territory. Remember, one of the major components of the nation's economic recovery last year was the housing sector. February's data shows a 7% drop. Moody's yesterday presented ITS estimate of the cost of a British exit from the European Monetary Union. They're actually optimistic, saying that any losses would be offset by rising exports thanks to a drop in the pound sterling. House prices in the UK rose year over year as more and more Brits are investing their pensions in the property market. Retail prices and core output rose slightly, and inflation remains more or less the same and at 0.3%, well below the central bank's target. Domestic demand in Germany has propped up business climate, according to today's IFO index. Most local companies have been diverting attention from weakening global demand to inside German borders, but the Bundesbank has warned of second quarter slumps due to weakening output and job openings. Asian markets were quiet overnight, with the Nikkei opening up nearly 2% after yesterday's public holiday. In China, indexes also rose, on indication the government may weaken limits on margin lending. The International Money Fund yesterday demanded that China provide more information on its monetary steps, including just how much the central bank owns in forwards and other derivatives. Oil, as of this morning pre-Brussels, rose slightly on an OPEC press release that expects a price rebound, even if Iran refuses to cooperate on a production freeze. The assertion is based on a general drop in supply everywhere else, and some analysts expect prices to reach $60 a barrel by the end of this year. Still ahead today, U.S. housing prices at 1 p.m. GMT, markets U.S. PMI at 145, and a speech by the Fed's extremely dovish Charles Evans at 5:30. Last on the agenda, this week's API oil storage data last week at 1.5 million barrels. We'll be back tomorrow with a London market review. Until then, have a great trading day.